Masters of innovation.
Looking towards the future with anticipation, raising up the technological conversation from the east to the west and all across the nation. If knowledge is the cure, then we got the medication. We're the masters of innovation, the masters of innovation. We're the masters of innovation, the masters of innovation.
Welcome, everybody. We're back once again with the Masters of Innovation. Trying to hit you up with that cutting-edge knowledge you need in today's evolving time. As always, I'm Garrett Wagner, your entrepreneurial CPA, your man with the boots on the ground, understanding the fundamentals every day. Because I got to balance out Joe Brunsman, the man that just seems to know it all. There is no fact that this man does not know in the world today. Joe, as always, welcome back.
Thank you, Garrett. Good to see you again.
So, Joe, a lot of things happen in the world, and we're going to talk about one of them today. Big accounting scandal just broke out. EY, Wirecard, everyone's all in a fuss. What happened? Who's to blame? I thought we could dig into this because this hits a lot of things we talk about. We got technology, we got auditing standards, we got insurance. This must be your sweet spot of happiness.
This is going to be an insane case. I think they're already calling it the Enron of Germany. So I saw that in the news today. So I would imagine this thing it's probably going to get drawn out for quite some time. And, I think when anybody starts using that type of language, like the Enron of Germany, I'll say alleged fraud of this magnitude, that goes beyond regulators, and that starts getting worldwide, definitely nationwide attention. And this is going to get political real fast. And you're going to have a bunch of angry people because we're already in, let's say, a global recession, right, at best. And in the news here, it's saying that some people had their funds frozen and they can't actually access their funds. So this is going to just be something to watch. That's for sure.
Well, Joe, why don't you help us break it down a little bit more for people that haven't obsessed over the news like you? In a nutshell, what is this whole major scandal that's broken?
All right. So to avoid any legal action against us, I'm going to read the Wikipedia explanation concerning the allegations, right? Once again, these are all currently allegations because I don't think anything has been proven. The allegations about the scandal and insolvency. So apparently in 2020, Wirecard announced a contract extension for their current CEO, Marcus Braun. Its longtime chairman stepped aside. So Marcus decided, okay, I've got this extension, I'm going to step aside. And then in April, an auditor found questionable accounting practices. According to firm Ernst Young, a trustee of Wirecard tried to, quote, deceive the auditor, resulting in the bank processor being unable to release the share results for 2019. In a statement, Wirecard announced that it was working intensively together with the auditor toward clarification of the situation, and that was of 18 June 2020. So later, and this was then reported on 19th of June, it was revealed that 1.9 billion euros, so what is that, slightly over $2 billion, I believe? Yeah, slightly over 2 billion was missing, which is, I would say, sizable. So their share value decreased by 72%. The CEO, Marcus Braun, resigned with immediate effect. They appointed a new guy to the position. This new guy, Fries, had only joined the company the evening before. A few days later, so this is as of the 22nd of June, so a week ago, the management board stated that the $1.9 billion amount, 1.9 billion euro, likely did not exist. Two banks in the Philippines, who were allegedly holding the money, said they did not have the sum and they never did. Then, of course, Moody's credit rating demoted them. Rating removed entirely 3 days later. 22nd of June, so last week, the recently resigned CEO Marcus Braun was arrested, and on the 25th of June, so 4 days ago, Wirecard filed for bankruptcy citing over-indebtedness. And that's as far as Wikipedia currently states the allegations of the matter at hand.
That sounds like a fun one, my friend. That sounds like a fun one. You got so many issues going in there, but it really comes down to basic auditing best practices. And everybody thinking today that doesn't work at E&I, why? Hey, what does this mean to me? Is this, it's going to be another big auditing shakeup for us or not? But it really just comes down to, are we following the best practice rules around audit evidence every single day? So we're protected and our clients are protected. I think that's the best thing we can do every day. Now, Joe, I'm sure you see this a lot. The clients you work with, sometimes they have liability complaints, but hey, let's remember, audit evidence, best case situation, get the confirmations on bank accounts. If not, we kind of go down the process. Is there a bank statement? Are we verifying what's there? We're really trying to hit the audit assertion of existence on those bank accounts. It's a big one. And that's why you've heard some people say all the time, don't just mail in on these audit steps. Just don't assume because it's there, it's right. Verify plus check it on top of it. Don't just take the client's word for it. When they say, oh yeah, it's $2 million, it's some bank in the Caymans. We need to see that. So Joe, what are your thoughts as you see this and how it impacts firms outside E&Y? How do you think it'll impact the average CPA firm?
Well, I mean, this was slightly before my time, but the whole Enron scandal definitely shook up the industry. And, the accounting profession as a whole, I think, took a big hit, which they finally, had recovered from after all of this. But I think kind of big picture, this is just going to be a nightmare for everybody. And I would say, at least in Germany, where I believe that the company is headquartered, I would just presume a company of that magnitude with this amount of alleged fraud, there's probably going to be a big shakeup, at least inside of Germany. And, we're already seeing news reports that there are people really all over the world who can't access funds. Those funds are frozen. So I could see, U.S. regulators getting involved in this as well, starting to try and kind of figure out how this is going on. But it just adds another kind of question mark on, how are frauds actually committed? What is really the role of an auditor here? How far are they supposed to dig reasonably to try and uncover that fraud? Even something we were kind of hashing back and forth earlier, who's paying for the audit, right? Like who's the customer here? Is it the company that's actually, paying for the audit? Is the customer actually the shareholders who need this information, et cetera, et cetera? But I think this is going to be so many different things that get put into this on top of probably a wave of bankruptcies occurring in the next couple of months anyways.
And we something else we talked about before we got started here, thinking through what audit evidence is and what we have to do. Right now the standards say, hey, if we get a bank statement from a client, we don't need to take extra efforts to make sure that bank statement's not fictitious or hasn't been doctored. It's presumptively mandatory, might not be the right legal term, but our presumption is what we have provided from our clients is accurate, unless there's something that causes us to question that's modified, which would have to be legitimately like, okay, here's the end of the month balance, and the font and the font size is completely different than everything else. Like everything else is clearly one font, and that balance number, which is higher than it seems to should be, totally different font, or like it looks like it was whited out and like it's handwritten in there. Besides that, we don't have a big threshold to verify that every statement is accurate and not fraudulent, because it's just way outside our scope. We're accountants, we're auditors. We're looking at the numbers, audit assertions. We're not looking at forensically, is this bank statement been altered by collusion or a third party?
There's always that tension between what the professional standards say and what the public thinks that you should have done. And that's always something where it's like, I think that the average firm really kind of needs to keep that balance in mind, because it's like, yes, CPA firms, like, you obviously have to make money to continue to exist. And if you dig, down every rabbit hole on every audit, you're not going to be in business long. But at the same time, it's like, we have to always remember that, okay, if this ends up being something big and we have to validate what we did to a jury of non-CPAs, of probably non-financially astute people, are we going to be able to, hang our hat on the work we did in front of people who, quite frankly, probably don't care what your professional standards say? And if you sit down and you try and argue with them the difference between an audit review and a compilation, they're just going to go to sleep. Mm-hmm. So it's always kind of that balancing act between, okay, this is the strict standard of what we're supposed to do, but always think about, how could this be perceived by, we'll say, a layperson if they were presented with this evidence. And in this case, that's a lot of money that's going to go down the tubes. And there's going to be a lot of lawsuits about this.
So it sounds like, Joe, this is something we'll probably kind of come back to as this case unfolds. We'll kind of touch in and monitor and watch it go. We were both a little too young for Enron, so this is going to be our time to get into that Enron-like world. And you can obsess over these articles and check out Wikipedia and share that knowledge back with everybody else. But I want to wrap up on this for this episode. One of the biggest takeaways is these things happen. These happen a lot. If you're a firm, this is why you have professional liability insurance. Straight up. Don't be ridiculous. Don't think it's not going to happen to me. It happens. Be covered.
It does. And, when management is the one conducting fraud or allegedly conducting fraud, it's just really hard, for even a really good meaning, very professional firm to actually uncover some of that stuff. Like you said, it really can be highly sophisticated, specifically designed to overcome the controls that the auditors put in place. Mm-hmm. And, it's like, hey, at the end of the day, you could still, you could get crucified for it as a firm. And is it necessarily fair? No. Is it even necessarily your fault? Maybe not. Is there always one more thing that some person on a jury thinks that you could have done to have prevented this? Yeah. They're going to say that. And it's kind of, unfortunately, it's just the way the world works. So yeah, have insurance. That's for sure.
Have insurance. Ending on this super simple note to a super complex issue as always. Thank you for tuning in today. Don't forget, click to subscribe and take action to change the world and continue to invest in yourself.